Good morning. Happy Friday. Happy Friday to you all. Let us take a look at you beautiful people. I am going to jump into the chat here because good morning, WA, Renee, MN Carol, Howard, Guten Morgen, everyone. That's good morning in German. Nobody who speaks German can be evil. Do you remember that in The Simpsons? There's one episode like that where Sideshow Bob is like in court, and the jury's like, nobody who speaks German can be evil, which of course is pretty funny because everyone can be evil though. So let's take a look here. What we got to sell off? What happened? I think something's wrong with my monitor because the market is down. It's showing a negative sign. I've got red on the screen. And that's frankly quite confusing based on the market. I'm going to show you some things today, some indicators that I've been pointing out that have been just sort of unnaturally quiet, right? This has been one of the strongest, here, let me share this has been one of the strongest rallies that we've seen in decades. By some measures, we haven't seen anything like this in, since the 80s. So this has been exceptional. So if you've been, buying things and you're making money on them, there's a lot of that going on, right? We're all feeling pretty smart in a bull market. And so we're getting a little bit of a gut check here. It's been driven by AI primarily. The economy is not all that great if you back out AI and all the spending going on there, but it is what it is, right? I mean, the internet came along and kind of threw a Hail Mary and sort of saved us from our stupid low rate, the housing market was a bit of a problem in 08, but this is kind of our Hail Mary, right? This is our Hail Mary where the economy is probably getting a little weaker and will ultimately at some point from an employment standpoint. But right now we've got this sort of AI thing giving us the promise of all these wonderful productivity gains and things like that. And I think there's something to that, right? I think that's what could really reinvigorate things. So let me see. Hopefully I'm showing you guys. So I'm Hans Albrecht, by the way, if you haven't seen me before. I've been doing this for almost 3 decades, professional options market maker for 15 years. And then for a decade after that, running up to 12 income ETFs, income funds. So using options as ways to generate income with options. So I've managed almost $1 billion in option strategies in my career and generated probably upwards of $800 million in cash flow from those strategies, right? So cash flow from these option generating strategies. But really, the first part of my career as a market maker was really the other side of the coin, which was long volatility, long option strategies, almost primarily. So I've had this sort of interesting career where I've done the income thing for a long time. I've done the long leverage thing for a long time, very successfully. And here we are. And so that's one of the things I bring to Turbo Income is this sense of, there's offense, but there's defense, right? Offense has to have defense on occasion. It has to always kind of have one eye to defense as well. So that's really part of a holistic strategy. And so when you get into options, as some of you may know, the short option game has its advantages, that decay, that wonderful time working for you. But of course, we're on the side of things being able to sort of go against us from a leverage standpoint. When you're long options, we have the advantages of leverage. You can turn $1 into $5. That is a beautiful thing. But we have some issues with that, which, you've got the decay, you've got things like that. So, pros and cons to both. But if you bring them all together, as we do in Turbo Income, you can really have a nice holistic approach to this game in what I believe is a much more successful way. So let's take a look. We've got markets. I can't bring up my VIX Central for some reason. I wanted to show you guys the VIX futures. We've got a VIX up around 19 last I checked. So here's your S&P, just kind of giving us a little bit of a whoops-a-daisy. And I'm going to show you a couple of charts that may have given us a little bit of a warning for something like that, because things got too quiet. When things get too quiet, that is sometimes a sign that they cannot remain too quiet. And so here we have a little pullback here. We'll talk about some of the earnings that were important. I think on a show this week, I said, we could probably get a 200 or 300 point pullback. And so I think that would make sense down into maybe the SPY gets down closer to this breakout spot of 610. That would be our 300 point pullback. And then ultimately, maybe we push down towards 600 because that's that nice big round number around 6,000 on the S&P. They're not exact, but we've got this 600 level that perhaps is a spot where markets may say, oh, okay, we want to get involved again, because I do believe that there's going to be this push into the end of the year. But let's talk about seasonality as well. So right now we have got a little bit of a pullback. So here we go. I'm going to show you this, a couple of things here that are interesting. My apologies for the resolution. Could be a little better, couldn't it? Could be a little better. But here's the S&P. So we have got, this is kind of an interesting stat. Only the third time in history the SPY has recorded 3 consecutive open to close drops from an all-time high close. Okay, so that's a little bit like slicing and dicing a little bit, but we can see we're having a bit of a struggle here. We're opening strong, pulling back. Again, yesterday, same sort of thing, right? Opened on those phenomenal earnings from Amazon and, or sorry, not Amazon, but a couple days ago from Meta and Microsoft. And then we'll talk about the other two in a moment and how that really impacts my view. As you guys know, I'm very bullish on AI and the infrastructure build out, and the managers of data and all that stuff is very, very key. That doesn't mean stocks always go up. There's going to be, this isn't my first rodeo. I did this, I went through a couple of these periods. .com was one of them where people get very, very excited, and you're going to have a little bit of ebb and flow. But I do believe, having said that this is going to be pretty special. I think this is going to be a special period, and we're going to have some pullbacks like this, but this is nowhere near done. Nowhere near done. So let's take a look at this. This is our squeeze sentiment indicator. So this is showing a bit of squeeziness. Oh wait, that's not the right one. Let me grab that one over here. Hey, how did I get those messed up? Let me grab you guys my squeezy indicator. And I'm going to show you another one in a moment. Okay, so here's your kind of squeezy indicator. Sort of takes into account a number of different factors. We'll talk about another version of this in a bit that actually is kind of interesting, which makes you believe that there could be more to come. But in the technical, in those squeeziest areas, we do see like things are a little bit squeezed out. But we're going to pull back a little bit. I'm going to show you my favorite breakout ratio in a moment as well. And we're gonna get this little pullback. We have seasonal effects in place here. The VIX tends to start rising and things like that. So we have gotten a little bit on the excited side, but there is much, much more to come. So this is where you kind of have to make those calls where you're sort of going, okay, from a flow standpoint, things are a little bit exhausted. A lot of stocks have gone a bit parabolic in the sort of squeezier types of part of the market. And we're gonna need a little bit of digestion at this point. And clearly, a couple of the MAG have not impressed as much, although Apple's kind of hanging in there. I think it's an interesting buy, actually. So here's another one. Let's go. This shows the August and September seasonality, right? So what happens every year, and you recall this was last year as well, you get this massive push into July, which is the strongest month, right? So you have the very, very strongest month, and that kind of pulls people in, leads them to believe that, okay, things could never go down again. And I'll show you an indicator that really showed that people were quite literally believing that because the evidence was there. But then we follow it up with one of the worst periods. Look at August and September. So the question for me in my mind is, can AI overcome this? Can AI overcome this? Because there's a new paradigm, right? This new phase of AI is the printing press. It's all this stuff. It's all this important stuff. Can it overcome this for the broader market, where we are seeing some weakness in, some consumer retail, restaurants? UPS took a big, sell-off. There's evidence out there that things are not perfect out there in a consumer-driven economy that's 70% driven by the consumer. Can AI overcome that? Well, if it works its way into processes over time and makes companies more efficient, and now you can do things with 3 people that used to need 30 people for. So that's going to play into the economy. Does it push up unemployment at some point? Guaranteed, but we're going to have to see how that plays out over time. So let's take a look at our seasonals. Here's your VIX seasonality. So we get this sort of pull back down into July, right? Because it's exactly going to sort of run alongside this idea, which is nothing can ever go wrong again. And that's why August and September can be a bit of a surprise to some people who maybe don't know this stuff or don't watch stuff like we do. Is you go from can't go wrong to, wow, I can't do anything right anymore if I'm playing from the bull side. So this is this amazing sort of yin and yang that happens with markets that we have to keep in mind, right? So when I start to see markets pull back, and I'm going to show you this. I can't wait any longer, but I want to show you this chart that I've been talking about here in a few different places. So this is showing a rolling sharp on selling 1 day to expiry, 1 DTE 25 delta puts. So without having to know a whole lot about that, I'm going to translate that for you right now. Look at this parabolic move. Now, a good sharp is like 2, 3 is getting to the high side. Depends what you're looking at, right? That's kind of it kind of gives you sort of a level of, overbought, oversold in a sense, in terms of when you apply it to specific companies. So, but in general, the sharp is going to tell you, well, how often am I going to be wrong on this particular bet? So this is saying that you could selling 1 delta puts, 25 delta, which is, pretty far out of the money. 25 delta puts has been like guaranteed money. So think of this as an indication of what's happened over the past month, is that the market has done nothing but go up with barely ever a downtick, and selling an out of the money put has been, unbelievably bankable. 10 is off the charts for something like this, right? So this is unnatural. I'm not saying that the market rally isn't warranted for AI reasons or for other reasons. That's a completely different story. But when you see that markets do tend to have to go 2 ways, right? At least some of the time. This shows an amount of exuberance that has been in the market. So I would say coming off of this, you could probably expect a little bit. I don't know if this is a 1-day sell-off. If it's only a 1 or 2 day sell-off, then beautiful. We are on the AI train again, and it's going to overcome all of our problems, right? That's what the market's going to tell you. But based on this excitement, I would say a little pullback just has to be kind of expected, right? It has to be warranted, because when you come off of parabolas, look at the last 8 or 9 months, you see parabolic stocks, they end sharply and then they kind of drift down. And then maybe they get going again, but parabolas end abruptly and then more slowly. There's a bit more of like kind of a lag. And then that's where people just kind of go, oh man, I just cannot make money buying calls at all in this market suddenly. So we want to be very aware of that. And have folks at Option Pit who are watching these things, right, for you. So here's your seasonality of VIX. Well, that's what happens, right? August, September, things get a little bit ugly again. And here is where we see seasonally over the past many years, decades, is we tend to rise up into October. So we can probably expect that we may have just a little bit of chop. Now, this one's a little bit like loosey-goosey, but here's Berkshire. Is Warren Buffett ever right? Probably over time. He is not a short-term trader, but he has raised a heck of a lot of cash. And so he has ideas about not being fully invested in this market. So, okay, so let's go on to, we're going to talk about some of the big earnings, because I think there's some lessons here. Let me just take a quick look, see if there are any comments. The Sharp ratio. Yeah, check it out, Chip. It is good stuff. It is good stuff. Fear of missing out. Well, yeah, there's a bit of fear of missing out. Absolutely. But I'll show you in a moment. You know what? I'll get to that right now because we're getting questions. I want to show you some of my kind of exuberance gauges. So here we have, let me make this a little bit easier to see. Again, sorry about the resolution. I need AI to improve that. So we've got a recent increase in speculative activity, right? So we know that, right? We're trading those things. We're having fun with some of that stuff. And we can see that we're not at 2021 levels. We're not at .com levels, right? There's still a bit of room here, but the way they measure this is kind of penny stocks, EV, like enterprise value to sales. This is very, very high, right? 96% is very, very high. People are pushing into kind of the junkier stuff, unprofitable stocks, right? So that's what gives you this sort of trading indicator, and it's got room to go. Now, one of the interesting things about it for me is this, right? So we may get a little bit of calming down from this perspective because it's been sort of very focused in some of the junkier areas. But if you look at the longer term potential for things to get crazier, this is what I really like to look at. So here's this measures the spillover effect from a craze. This says meme craze, which is 2021, and then, you know, COVID, stay at home. Well, it wasn't really COVID, I guess, but a little bit of COVID and then meminess. But this is the percentage of top 100 stocks in the S&P 500 that had inverted call skew. All that means is just everyone just getting really, really excited, buying calls at any cost, buying calls to cover short positions. Gets crazy, right? Which speaks to something that we presented last night, by the way, which is going to be a tool that you can really use to take advantage of that. So hint, 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 if you want to look into that. So this is squeeziness that spreads into the rest of the market. 30 to 35% of stocks having this kind of, you know, me too, I'll go along with it. Not a me too moment in that sense, but hey, this is speculative fervor working its way into a lot of, oh, thank you, Hannah. Thank you. This is, yes, Hannah, you give it to them. Hannah's talking about advance notice. So this is speculative fervor seeping its way into the broader market. And that's what happens in a true, some of you may have not been trading back then, or even, and certainly maybe 30 years ago when we lived through the .com, which is basically just sticking .com on the end of your name. You could sell coat hangers, but if you put .com on the end of your name, you know, your stock tripled. That is a frenzy. That is a fervor. That is a speculative froth that can happen every now and then. And in my view, this is about to happen again. We've seen a bit of it, but look here towards the right of this chart. There is plenty of room. Think of this as, you know, it's spread a little bit to the broader market. But guess what AI inference is going to do? It's going to push the potential for great things into the hands of every single company, right? This isn't, you know, Zoom or work from home, you know, solutions, or Amazon sending you a package in a day. This is AI working its way into what we call the utility, the usefulness phase, right? It's no longer just NVIDIA making money from being smart and having to be being in the right place at the right time for a company that made this stuff for video games, for video game consoles, and suddenly it's perfect for AI, right? Suddenly Jensen Huang is like, wow, that was kind of lucky. So that's part of life, right? Being in the right place at the right time. But now it is much more about how is this going to be useful to people? We'll talk about that with earnings in a moment. So I think this has a lot more room to go because of this potential for this to work its way into absolutely everything. Everything is going to become, think of .com. You just put .com on the end and say, we've got some sort of internet strategy, which could be like putting up like a homepage. I'm going to put up a homepage and then announce to the market that I've got an internet strategy. That's as easy as it was back then because nobody was on the internet. So it was like, okay, we're game. We're on the internet. Well, not everything becomes a meme stock, but everything becomes like the meme stocks could go up 10 times. A completely unprofitable pure AI stock could go up 20 times, 30 times. Now, other things start to absorb that, right? Because speculative fervor starts to work its way into everything, which is this, right? And it's this.com. Cisco at 100 times earnings. Stuff like Nvidia is not 100 times earnings. It's not even half that. What if Nvidia trades at 100 times earnings? Especially given the growth that people, I think, are underestimating. That could create craziness across the board. Walmart starts using AI in some amazing fashion to sort of be more efficient with their trucking routes and things like that. Boom. Now they get some sort of, no one's going to know how to value some things. And it's going to be a very interesting time. So let's talk about, this is big stuff, right? Like, look at the soaring demand for data center capacity. It's absolutely gigantic. Triple data center capacity by 2030. Look at this. The AI effect, rise in AI workloads, is just 5 trillion in capital expenditures. I don't think anything really slows that down. Some people say this is cyclical. I don't know. I think it's a bit more running water, electricity, right? You kind of have, if you're a company facing existential risk because your other 2 competitors are now doing AI, using AI to be more efficient, you think you're going to sit around? No, you're going to be like, I have to up my budget and I've got to keep up. It may not work. It may not work, or it may work, but you have to do it. So, right. So that's why, the picks and shovels tend to do well. And what's our reward in the end? Well, our reward potentially, and our big Hail Mary bailout of AI, is we are heading toward a big problem. Here's your Congressional Budget Office estimates. It's just, no one wants to reel in spending, all this crap. But can AI now do what the internet did for a decade, which was keep inflation down, deliver promise to the economy as a whole? And it will, right? Small, medium, large business. It's going to help big companies. It's going to help small ones. It's going to help potentially a lot of different people. So let's talk about, to finish off here, I want to talk about my Amazon hedge and also the important earnings that we saw. Okay, so we saw, I think I have a couple of little slides here. So Apple was good, right? I've been saying I kind of like Apple. I think they're one step away from doing something that is going to put them in the AI in your pocket, silo. Like, if they do something correct, who's better than Apple? It's an expensive phone. Well, that's done. The whole, I can buy a cheap phone in China that does the same thing. Sorry, Apple, the latest Apple sold like very, very well. In fact, that was part of the announcement. So Apple's got it. They've got it. They've got the people. They've got the they've got the ecosystem. They've got all the other service part of the business. If they can just figure out AI a little bit, I think it's going to be very, very interesting. So for Apple, a lot of highlights, beat across the board, good numbers. MacBooks were actually selling well, right? AI is going to need, I just bought a super duper computer because I want to be able to handle things. I know AI is a lot in the cloud, but I want to be able to handle things. And Cook said some good things. AI is one of the most profound technologies in the world, and we're open to acquisitions, right? He's telling you, we're doing it. We're going to do it. Microsoft, let's take a look at Microsoft. Beautiful example of something very, very important I want to say. AI usage, Azure AI usage tripled. That's their cloud, right? So we'll talk about Amazon in a moment and why it faltered. So Copilot is delivering value, right? It's delivering revenue. So the important thing to take away from Microsoft is that this is happening, right? Their cloud growth was way off the charts, bigger than expected. This is where the money is going to be made. Selling GPT for $20 a month or giving it away for free is not making anyone money. And in fact, in this arms race where everybody wants market share of AI, they're just going to keep it cheap. And there's not really any money in that, not anywhere close to what they're spending on this stuff. So the value is in how do you work AI into a solution, a product. What's a product? Microsoft's ecosystem. Their very beautiful suite of tools that now they can push to people and say, well, listen, these are even better now. You've got AI now. That is what you see there. This company is unstoppable. Google has that as well, right? So the Google cloud growth was good. Amazon was the best. But Google has that ability as well. They have a productivity suite, all the tools that you guys might use. Very, very important feature of AI here. I had somebody ask me the other day, they're like, well, how much money are these guys going to make selling AI for 20 bucks? You're missing the point completely. It's not about selling AI for 20 bucks. Amazon, not great cloud growth. Now, I think that's important, but that is a temporary lag effect for Amazon. So for Microsoft, for Meta, which killed it on all metrics, that is another company that is actually monetizing AI, right? So the companies that are figuring it out, the companies that are going to figure it out, Amazon isn't going anywhere because there are two parts to cloud and everything that happens in the cloud, right? Yeah, what's it going to cost? Well, I don't know, WA, like they could probably charge you almost anything. You're going to keep it. I have heard of some people switching to Google. Maybe there's some limitation. It's possible. Amazon's the market leader in cloud, but not so much smart cloud, right? But they're going to pivot. It's more the foundational element of gajillion businesses, right? So this is going to expand. There's no way this pie doesn't get bigger and Amazon doesn't take a piece of that. So I like Amazon. I think it's a buy. I think the sell-off is temporary because it just didn't shoot the lights out. Now, I did a caller trade. So what I did, I want to show you guys this quick, is I did yesterday ahead of the earnings. I was a little worried. I thought, this I don't know, can they really move the needle on their cloud? And frankly, it was a bit of a gut feel because Amazon sometimes kind of poops the bed a little bit, and people just kind of reconsider. It's not that stock, right? It doesn't have that NVIDIA potential, and it had a good run up. So what I did was I bought the September 225 200 put spread for $5. So the 225 200 put spread for $5. $5, and I said, well, what can I sell to pay for that? Well, I sold the 250. I sold the 250 call for $5. So I fully financed that downside. Now you are agreeing that I placed that strike above the expected move, which was about $13. And I said, I'm okay. I'm going to manage that position if it gets threatened because I'll be obligated to sell that position. But I thought this is a stock that I wouldn't mind protecting. I wouldn't do it on, maybe an NVIDIA, but we'll take a look in a couple of weeks. So that was a costless way to protect my position. Now we're sitting at 219. I'm going to wait and see how this plays out. If we don't, sometimes I do, WA. If it kind of pulls back, then I will monetize this at some point because I don't really want to stay short. But given the seasonality, given what's happening out there, I think that's kind of that ended up being a good play. On Meta, it would have been a terrible play, right? Because we surpassed the expected move, and I would have been threatened to the upside. I still would have made money on the overall position because this caller I place on my leaps position, right? You can do it on your underlying stock position as well. So I think there's some interesting sort of lessons coming out of those earnings that we want to take away from that in terms of where the cloud growth is, in terms of who's actually monetizing, who's making the most of this, making hay while the sun shines. And that's it. So guys, I think you guys have to get to some classes. I hope you guys learned a couple things. That's what you can do now. In other positions, so ahead of Goldman earnings, I just bought some out of the money puts. I was up like, I don't know, $150 on my position. And I thought, I'm going to spend $10 and just protect myself. But I love Goldman so much that I didn't want to cap my upside, right? So you have to sort of make a little bit of a call. You can finance your insurance for nothing, right? But it's not nothing. You're agreeing to do something here. So, but technically there's no outlay of money, which is nice. That's a beautiful part of the collar. So that's it, folks. Let me see. Are there any questions at all? Some of you probably have to get off to your. And I would suggest you guys read through the chat, look at what Hannah's been saying, and if that piques your interest, look into it. If you don't, you've been forewarned, right? So check out what she's talking about. Check out Turbo Income, where we are killing it in our turbo trades. in our income trades. And that's how we roll. So everyone have a wonderful day. Have a wonderful weekend. I always get the good fortune of having Friday where, everyone kind of feels good. It's not hump day. It's not Monday where you're like, oh man, this is another week ahead. Here comes the weekend. We're going to have beautiful weather here. I'm going to go for a swim soon. Everyone have a terrific weekend. Thanks for watching. We'll see you next time.